Let's go. Yeah. How about now, guys? Yeah, recording is good. Fuck yeah. All right. We are cooking. Okay, so hidden accumulation. It's not me trying to be uh, a smart aleck. It actually there's no other way. It's the best thing to call it, right? Now, accumulation. Let's just check. Okay, we got it. Accumulation, ICT says, is your, uh, well, arguably it's not quite the same as what he's referring to as consolidation, but it's similar, where price goes sideways, right? It just does something like this, right? Accumulation, let's bring up the dictionary. Acquisition or gradual gathering of something, right? Well, when we're talking about the market, when we're talking about NASDAQ, well, any market, accumulation is referring to the gathering of positions, right? It's also referring to the gathering of traders entering trades in a range, right? So you the thing is, you don't know whether it's necessarily longs or shorts. And does it even matter? Oh, there's so many shorts in this range. Oh, there's so many longs in this range. Does it change what direction is likely to end up being chosen for distribution? No, doesn't really. And we'll get to that. But the main thing is we're having, by the way, liquidity is everywhere, right? It's not at swing points. It's all over the place because uh, you think you think traders are just going to place their stops neatly above swing highs and lows? No. Like traders act emotionally, don't they? On emotion, most of them. So they're entering here, they're entering here, they're entering all over the place, right? And if we're aware that the majority of the market are new traders on the retail side, they're not going to know to place their stop in the correct place, you know. So yeah, accumulation, it's generally just going sideways and a period of compression, right? It's holding price in a space, right? I am someone that very much believes that there is an algorithm and that algorithm contains price for a certain period before expanding off, right? So that's your accumulation from an ICT perspective would be like he would actually show accumulation like a high, a low, right? Your dealing range, right? Uh, this high gets taken and that low gets taken, right? And then that's what he would say is a period of accumulation, right? The dealing range, yeah. And then a subsequent, oh, this was manipulation outside that range and we can distribute up, right? Well, what if we could actually see not a pattern-based accumulation, but an actual accumulation? And I'd call it institutional accumulation or hidden accumulation because what we're able to do is with data, right, represented on the chart, we can see where price has spent most time and where price has spent the least amount of time, right? And then suddenly you have an edge over, by the way, the majority of traders. because there are traders that are like, that looks like accumulation. It doesn't behave that way. And how they expect, how they're taught. And then there are traders that can see where price has been compressed, held within a certain price range, spent the most amount of time, and we know that there was an intention to try and gather a lot of fuel in that range before moving on. And we'll get to this in a moment, successful or unsuccessful accumulation um, soon. But yeah, from the get-go, I think I'll pop over to this chart here, and I'll just turn this off for the moment, and we'll whack this on. Time price opportunity. This, I have the volume profile taken off. I just want to see the accumulations, right? Or where they wanted to accumulate, right? And this tool is showing the most amount of time spent and the least amount of time spent in a price range at a price, right? And I have the weekly with a block size of 1 hour, and the row size, I just keep it automatic for the weekly and monthly profiles. Right, so you see, well, first of all, the term point of control. You often see that uh, bandied around among volume traders, but it's actually also used in time profiles too. These profiles here are most time spent, where you see the peaks, and the least time spent, which we call single prints actually on the profile when you have only one block there. They're time imbalances. They're very similar to FVGs on the 30-minute, right? Um, but yeah, for us, it's just showing where they held price and they moved price. They held price and moved price, not spending much time in between. And this is what I would refer to as hidden accumulation, right? And they're only successful truly if they actually manage to uh, gather enough volume, right? And we're seeing retail volume on this chart, right? This indicator is time price opportunity. You need actually the I think pro or premium, or I can't remember the name of the plan. Premium, yeah. If you type in TPO, it's this one, right? Um, there are free ones too. It's by TradingView. There are free ones, but they're not so good. You can always use an advanced charting software like Sierra or Quantel or something like this. Um, they have it too. I think Quantel is free. I'm not sure if the TPO side of it is free, but you could try and work that around. I like it all on TV though, because they've had this for like maybe a year or so now. I can't remember, but it's nice to have everything on TradingView. I'm sure you'd all agree, as opposed to flicking between softwares. That gets a bit complicated. We actually require the most amount of our brain power to operate in its simplest format, just in case we really need that explosive thinking for like bursts in the day. Like, for example, you're managing a trade, right? You're trying to execute and dynamically manage your risk. That requires the most amount of brain power as a trader. So flicking between 300 different softwares sounds cool, right? It looks cool, but it's not. It's not really acknowledging that we're only human here, right? And we have limited capacity to think about a million things. Well, at least I do. Okay, so right here and now, we see these weekly profiles. These are the time most spent for, think about it like previous day and previous week highs and lows. Yeah. Well, these are previous week, as you can see here, previous week time profiles, right? And to neaten things up a bit, You just hide that, hide the candles for the moment, right? And so what I'm seeing here is this is the current week, by the way, current week, yeah, which I don't really care so much about, right? Because the previous week profile is locked in, like previous day high and low, it's locked in. It can't change. Last week's highs and lows, you can't suddenly be like, actually, like price suddenly decides, ah, I don't like my homework. Can I get it back and just change a few answers? Can't do that. Can't do that. It's already locked in. Okay, so we have what? Value area high and a value area low. I see this as the true range high, true range low from the previous week. Yep. And I mean, this is something that I don't generally share around. I've talked about it a little bit here and there, but I just see it as one of those things that's just a little bit too good to share. But you know, over the years, I've become less precious about things, I guess. Um, and I think that's not such a problem. Um, right, so now we have previous week's value area and a high and low range, right? Well, let's just say if I turn that on, if I put a little vertical line so we know where we're starting, yeah, and then yeah, that's the one. Um, and then I whack on the candles, I turn this off. Right, well, we're looking for deviations of this range. Yeah, previous week, this is the current week. We have our deviation. Where's the target? Well, it's very likely we will hit that, the 50%, right? So why is this range hidden accumulation? Because they have this period of accumulation, right? Either side of this range, yeah. And when we deviate it, that's them filling positions counter trend, right? And here we actually have another one, deviation here, deviation here, and you can see we keep returning back to the 50%, 50%. And if we had a lower time frame shift, probably back to 50%, because I think this went in this sequence. We went like this and then down, right, for NFP. So returning back 50%. And can you imagine those moves are huge, by the way. Can you imagine that same principle applies for the monthly profiles too, where you're looking at like 1,000 point trades easily, right? Um, yeah, yeah. So it's profound. Like you could become one of the most lethal swing traders if you're able to qualify what determines real accumulation, right? And I say real accumulation, they're containing price in a zone, right? Intentionally, algorithmically. This is the algorithm here doing this. It's containing price in a zone. It's aware of where it did that, right? It's aware of the price range it held price in for most of the time. That creates the value area, by the way, and it creates the point of control, which is the exact price that once this loads, where we spent the most amount of time. You can see most amount of the time was spent in the center here, which isn't really useful to us because when we open, well, you can see we actually return back to it if you see it in sequence. Once we deviated previous week's value area high, yeah, where do we return back to? The point of control, and we mitigate it. Notice how the indicator stops plotting the level. the point of control once we hit it. That's for a reason. I just have statistics to tell me that 87% of the time after deviating, that would be your target, the 50%. Um, and that's across the monthly and weekly, and even the daily. The daily I'm using RTH though, but I'm not going to speak about that now because I like seeing the broader image. And yeah, so we have that going on there. Let's go to the monthly too, right? And I will pop up to, yeah, so this was an interesting one. Uh, right, so let's get up our value, time value area, our hidden accumulation range from previous month. Yeah. When does the new month start? Because that's when our levels become active, right? Well, let's turn this off. But we acknowledge that the point of control, the time most spent for previous month, is around the 50% of that value area. Hence why I'm often just seeing if it's in a similar range. I'm like, well, I'll just use the 50% of the value area, right? And what do we have? Start of month, we deviate, right? But we actually, you can't just suddenly throw your awareness of structure out the window. That would be the high to break, wouldn't it? Because that's the low, that's a high. If you watch the um, Market Structure 101 lecture that I did here, you'd know that that is a valid high to break because it broke with a body close below a previous low. So you have this broader, you could enter in and around here with whatever your criteria is to enter intraday or whatever, or intra-week, because these are long playing setups. Um, with the awareness that that's the boss battle, I call it. Well, we need to close above that, probably on a 1 hour or something, to really say with conviction that we're likely to hit the statistical level. Everyone loves statistical levels. You got Joshua's stat map, etc. Right? And DTT time ranges and the deviations. Well, it's the same thing, right? It's a level we know 87% of the time will hit. Yeah. But you need your qualifying entry because you could have tried to enter here, right? But we don't break a high. So it was just a retracement to go lower. And then you're like, I should have known not to enter there. So yeah, these are your little hot pockets for looking for slingshot trades, I call them, where you deviate, it gets exhausted and price gets exhausted, and then we slingshot back to a statistical level, being the 50%. So yeah, this is where you'd usually see me doing stuff like this with my deviation. That's the manipulation. Manipulation of hidden accumulation. Yeah. So yeah, that's that. This is the monthly previous week setup. And you can see how, even if you entered off here, I like to, when I'm looking at things, I'm like, what's the worst case scenario? Well, even if you entered on that 4 hour range break up to the 50%, that's still 200 points, right? And incredibly high probability trade. You're taking bites out of the market too, which we like, by the way. Um, yeah, I mean, this is something that I discovered. I'd hesitate to guess, but it would be over a year or maybe even 2 years. Time flies. Time really does fly. this isn't a forum for me to sound like an old man. I remember in the group, in my group, I was like, I'm 33. I'm so old. They're like, you're not old. And I'm like, yeah, but I've been trading for 10 years. They're like, oh, okay. I'm like, so add another 10 years on. I mean, even then, 43 isn't very old. Maybe you could add 20 years on. All right. Anyway, so yeah, that's bloody it. Experiment with it. It's one of those things that if you actually bother to, um, I'm going to show you one other thing. If you bother to investigate this, uh, you'll realize that, damn, this just keeps working. There isn't a time where I've seen it not work. Very few approaches in the market. Well, number one, I I don't I don't think you're supposed to be able to find something that works all the time, right? But this is one of those things that works all the time. I don't know, I'll give away something, I'll do something. Someone try and find me an example where it doesn't work, right? There'd always be a reason like, oh, it's because we as humans didn't wait for confirmation, right? So yeah, and the confirmations are always very clear to me. You need a range break. You need your entry pattern, right? That's where the patterns come in. But the actual range itself, it's a hidden range where they're accumulating and they take profit at the mean, right? They take profit at the mean, the 50% um, mean reversion, isn't it? Yeah, that's the true market dynamics, right? So yeah, week 1 hour auto, yes, yeah, keep it auto for the weekly and monthlies. All right, so I'm gonna whack this on, and we'll say, okay, successful or unsuccessful. Why have I indicated these two words as important factors in how we can actually frame intention from the institutional price compression ranges that we see here? Well, and to qualify what we expect price to do in future, right? So this is where I would add volume, right? Because what we're doing here, right, is we want to see whether, sure, we have our value area from previous month, but we want to see whether they were successful or unsuccessful in convincing people. Another word for that is, by the way, inducing people, inducing retail. We only see retail volume on the chart here, by the way, to enter where they were holding price the longest. Yeah. So you compare, if you see here, maybe it's going to be easier if I change it to red and I'll extend that. And you can see this is where the most volume was produced. Most traders entered. We don't know whether it's long or short, by the way. It doesn't matter. We're just trying to get traders to enter at a period where they held price the most, right? Because them holding price at a particular price level for the longest period of time, the algorithm holding it, containing it there, there's a trickle through effect of like DTCC and these big, well, even NASDAQ as a corporation, they are managing large orders from institutions. And they are containing price in that range. They're all in agreement. We're going to contain it in that range. We're going to try and build up enough activity there so that we can fulfill our large orders, our limit orders, right? And so all of the powers that be are in agreement that this is the price level. If they're successful in, I would say they were moderately successful, but uh, not as successful as they could have been because the majority of the orders from last month from retail traders occurred here. Yeah, right. Whereas we have a a lower time node. Well, it's a high time node, high amount of time node, like a high volume node. But it's a secondary point of control, right? Secondary point of control. So they were moderately successful in achieving that, right? And so, new month starts, we come up and reject that. You see how it stops printing after it gets mitigated, yeah? And yeah, so that's what I wanted to emphasize. Unsuccessful and successful. When it's unsuccessful, you'll just see that the volume is up here and the time is up here or something like that. And therefore you have them quite separated and they were unsuccessful with the accumulation phase, right? What do we then expect if we're unsuccessful, if they are unsuccessful with their hidden accumulation, right? Well, price then needs to move away. It's a suggestion that we're likely to break that previous month value area and move away to create more of a range down here, to create a range down here, yeah? It's a suggestion that we are going to break out and form a new range. Why? Well, purely with the intention to encourage more traders to generate that fuel, right? Retail traders to generate the fuel so they can then return back up, hit the time point of control, the period where they were trying to accumulate, come and return back to it and have an attempt number two, right? Second attempt to try and get people to enter in that time range. So price moves away to convince traders to, well, to build up more time away from that level, right? So that they can finally come up, get traders to enter once again at the level that they attempted to accumulate. So that's when you have a time and volume disagreement. Yeah. It's actually very straightforward. I mean, some days I'm able to explain things in a straightforward way, and some days I seem to struggle. But that's just an example. So we need to go and look at some more examples, right? Let's find where time and volume disagreed, right? Because right here and now, I'd say like questions on it, a question on everyone's lips is probably, does that count? Because they're separate. Well, they're not that separate, right? They're kind of close by. So and plus you got a secondary volume node here, so high volume node at the time level, right? Um, so yeah, I would say that that was not clearly unsuccessful. Needed clarity on that, right? So these are relatively close by, but somewhat separate. Yeah, and really we're just looking for, do we have a hump here? Yeah, so they were uh, relatively successful in accumulating here, getting traders, retail traders to enter where they're holding price. Extremely successful here. That's a strong level. You can see when we return back to it in future, it explodes away. And here, moderate success. And these are the monthly. So it's, if you have an unsuccessful monthly accumulation, well, it's going to take a bit of time to maybe come and finish that job, right? So uh, yeah, here we have time and volume very separate, actually. Here, yeah, yeah, I'd say that's significant enough. And then what we move away, you see, we move away, we break the value area low. Yeah, and we come up to accumulate once again. Yeah, I am recording it. Yep. Let's have a look at the weekly profile. So back to the 1 hour and the weekly. And I'll even pop it to the 1 hour time frame. All right. So periods of where we have the time and volume in agreement, right? And not. I'll send the link to the recording in my subgroup in here. Okay. So yeah, this profile here, you can see time and volume in agreement, time and volume in agreement, last few weeks, and the current week we're not referencing because we need that locked in, and that will only happen next week. So the current week's value area will be of interest to us. And so here we have time volume agreement. That's a strong level, so that should act like a magnet once we finally find footing. We have here time and volume and agreement. It's a strong level, meaning they were successful in convincing retail traders to enter in that at that price level, where they held price, where you have the most amount of touches, pretty much, is the most amount of time spent. You understand? So yeah, that's a very high probability. I mean, I'm going to set an alert there because that's a very good place to look for a long. You can see all this inducement away from that. Yeah. Um, yeah, so we could even see something like this, honestly, uh, like that, and then up to this guy. We'll see. If they're accumulating here on this current week, yeah, successful accumulation, well, that's accumulation, hidden accumulation, manipulation, and if we then break that, I'd say that high there again, then that would confirm that this was the manipulation outside of this week's accumulation, and that would activate distribution, wouldn't it? Yeah, so that's why I say it's hidden accumulation. You just need to find out whether it's unsuccessful or not, right? So yeah, I'm gonna try and find a range where on the weekly where it was unsuccessful. So you got time and volume up here, that was successful, right? And you can see on grander scales, you've got successful accumulation up here, dual weekly, so 2 weeks in a row, they are most time volume up here. You got to remember that this is that whole period, and they managed to produce the most time and volume up the top, right? So it's quite significant. So this becomes a giant accumulation, right, where they were successful. Manipulation, distribution, right? So yeah, you can actually see where accumulation is truly happening and whether it's a bit of like you know what, we have to come back to that accumulation range again because we didn't produce enough volume. This is it. Successful or unsuccessful. So here it was successful once again in this time range. By the way, the the start of the time range is the start of the time profile, which is this blocky one, and to the end of the volume or the value area, should I say. If you extend your value areas, they'll cover the time range that it's referencing, right? The data from. Right. Moving on. Right. So yeah, that was accumulation, manipulation, distribution. Accumulation, accumulation, new month, oh sorry, new week, manipulation, distribution down, right? Because these are all successful. And yeah, still successful in my eyes, but the most volume was weighted up here. So can be an indication that these are very tight little ranges, so a bit more granular. But I would be seeing that as potentially, but not 100% confirmed, a clear disparity between time and volume. But it is there. Um, so new week opens. What do? We return back to the time concentration level, you see, because that's the new week, with an attempt to bring in more volume, right? And it was only truly here, it looks like, where they were able to do that successfully, but they attempted twice, right? I mean, really, you'd have to check vertical volume per bar to really see where they came in, right? Because we're accumulating to do what? Well, typically go and run the high, because that is real distribution. We actually break a high that put in a low, right? And we never actually do that until a few weeks down the line. So, um, but what it says to me is there's going to be probably an attempt to return back to the time level, right? Which it did immediately. So how does that give us an edge? Because it says to us, new week starts, right? And we're like, okay, well, the time and volume from previous week was separate. Yeah. So we're trying to create a mechanical process behind this. Yeah. And then, so when we come into the new week, Sunday open, we're like, hey, you know what? We're probably going to have to return to that time level before we do any other kind of move in the opposing direction, right? Because the time and volume are separate. We were not able to convince traders. It's all about convincing, yeah, like coercing, inducing traders to enter at a certain price. That's what it is. And if they haven't been able to do that successfully, well, we're going to return back and we're going to try and do it. The bigger the disparity, the better, because it means you have, uh, can you imagine if you have uh, time concentration here and volume all the way up here in a price range that was just this, yeah, that was sort of contained between the two time concentration and volume concentration level. Well, it means that if we have to come back to the time concentration, we have to come all the way back down here. Whereas the closer they are, uh, it's less comfortable for us to frame a setup to a price distance that isn't very far away, right? So, but as you can see, we're most of the time recently we're successfully convincing traders to enter at a level where price is being held for the majority. Yeah. Like an edge will often occur when you can see something that doesn't agree, in price, when something is a little bit off, when the matrix has been disturbed, right? That's when we're like, that doesn't add up. I'm going to monopolize on that. And then you develop a way to do that. For me, the simplest way to trade TPO is, and it's not something that I can tell you, nobody knows this. Nobody knows this. I just noticed it and I tested it extensively and it kept working. And I'm like, God, it's too easy though. We always have this like when you find something that keeps working in price, and it's very simple, you're like, no, that can't be. You almost don't believe it could be. Yeah. Um, but over time you start to trust that simplicity, and then you really learn to appreciate the simplicity. If you can find something simple to trade, meaning you can literally have one box on the chart, everyone else has all these million things. Not to look down on people with a hell of a lot of things on the chart, you know me. I get bored, I put stuff on the chart. Hey, hello everyone. Hey Jude. um when I say "Hey Jude," it sounds like I'm about to go into song and start singing like Paul McCartney. All right, so "Hey Jude." No, I'm not gonna sing it, guys. I'm not gonna sing it. I don't want to sing it. I can sing though. Honestly, I can sing. I can sing, but it's been a while. I'd have to practice again in the shower. Don't make it bad, just sing it. See, I read that as don't make me feel bad, don't sing it. And I'm like, yeah, that's probably more what you think after I sing it. All right, anyway, so what is the simplest thing to take away from what I've shown you? Sure, you can focus on successful, unsuccessful accumulation, but for me, I can just focus on that sometimes. I can sometimes just notice that on the side. It's like, oh, if I'm a bit bored, I'm like, oh, I wonder if we actually were able to successfully accumulate at that price range last week. Yeah. And I'm like, oh, we didn't. Oh, and we haven't come back to that level. Well, we'll go there. We will go there, right? And but the thing that is simplest for me to take away from this is always going to be, it's always going to be my value area from previous user defined time, well, the time range of previous week or previous month, and a return to the mean, 50%, right? So we know that's the end of last week. That was the time range, the value area. You can even do something that neatens this all up, right? So sometimes I'll do just this. I'll remove the volume because the value area, time value area setups happen with or without volume, by the way. So I'm removing pieces of the puzzle, pieces of the process that, like I got very good over the years of being able to look very objectively like, is that helping me get in a trade? No. Okay, remove. Is that helping? Yeah, that's kind of the core of what. Okay, well, that seems like the main reason why I'm entering a trade. And then I'm like, is there anything else I can shave off? Like, if I can have a step-by-step process that includes 3 steps, I'm content. If I start to add anything more, like 4 steps, I'm like, what can I get rid of? I just naturally end up getting drawn to uh, trying to have the least amount of steps as possible because I know that you just don't need to. Like we're actually sort of we subscribe to the idea that we need everything to be complicated because trading is very competitive and everything needs to be super hard, and if it's not hard, you haven't watched enough videos on various different topics and you suck and it's because you're a dumbass. Actually, the best traders are like often like well, like back to the start of the conversation, which wasn't recorded, by the way. I was saying how statistically the most successful traders are hitting 30 to 40% win rate. So actually, if you can aim for 30 to 40% win rate, you will make more money, apparently, says the statistics. Less is more, exactly. Um, but yeah, it's the traders that are secretly getting totally railed. I don't know if I can say that because that's a sexual term. I have to be careful because there are some things I can say that probably offend people, some people, and it's just because I have no filter. Uh, yeah, certifiably insane. But yeah, we have. This is the simplest process. What else can I remove from this? Because this chart looks busy to me, doesn't it? Let's admit it. This chart looks a mess, right? an absolute mess. Uh, take off the blocks, take off the letters. Well, now it's looking better. Thank you. That's very nice. Thank you. I know. All right. All right. Yeah. So, and we can remove the point of control. Whoa. Now it's looking nice. Look at that. And you got what? You got previous week's profile there, which is what we can reference. I'm always referencing last week, last month. I'm not referencing current month. What's the setup? Well, we take previous week's value area and we use it on this week. Keep it super simple and clean. And that's it, right? That's it. What do? We have this giant ass deviation, sure. Yes, we do. This guy. But we have these smaller guys, don't we? Let me just double check that that's week, 1 hour auto. Yes. 4 hour for monthly block size. And we have this guy here, right? And this guy here. Don't lose sense of how decent those trades are because they look tiny compared to the huge price range we're dealing with here. If we pop down to, now I'm going to do what? I am going to turn off that guy. I'm going to go to this guy, the 15-minute. Come on, you bastard. Don't say bastard. That's also going to offend someone who is a bastard. Okay, so yeah, this is going to be a much lower time frame entry, as you can see. I mean, this one is you're pretty much just waiting for exhaustion, and then you can target. That can be your uh, magnet, statistical magnet, right? Um, as you can see, you can trade this on its own with nothing else, right? Where does the trade occur? Well, it's not going to happen until, honestly, you could have got in maybe around here, but the main significant break would be to close below that. For me, that would really change my view on buy side to sell side movement, right? There'd be ICT traders trying to gamble an entry up here, I know, but that's not always going to work out, is it? Because you could have an internal scam to go higher. Um, so yeah, this for me would be the break to revert back. And you got to remember this is the weekly, previous week's value area, so it's going to be a weekly setup, right? So that would take us down to the 50%. Incredibly likely at that point in time. So any deviation, opportunity to revert back to the mean, right? Uh, let's. I do use the daily. I just hang on. I just think it gets very granular and it gets a little bit more requires maybe a bit more experience to trade it because those ranges aren't always very big. When the information is coming at you very fast, like it requires experience to like process that information, right? So when I'm saying, hey, this could be your weekly bias in a tin can, by the way, that's what I'm saying. It's hidden accumulation on a large scale, and when you deviate those uh, hidden areas, price ranges of accumulation, um, you're going to be offered direction that lasts. Yeah, not just a short-term deviation return back to. It works on the daily. but I am only using it on the regular trading hours, right? Regular trading hours. Yeah, I can say it in a different way, but the simplest way to explain that is if you're using it on the daily, use the previous day regular trading hours, um, TPO. Um, yeah, but yeah, how could I enter here? Honestly, I would be entering here because on a 1 minute, that's a high that put in a low and we closed above here. So my entry would be on the next candle here, back to the 50% of previous weeks. So I make it look so easy. I know. I make it look easy. Is it that easy? Well, it is if you can wait for the setup. But we know that the hardest thing to do is, why did price bounce exactly from that value area low of previous week? It's a hidden level. It's in reference to no actual particular level. It's because these are the real bloody levels that the algorithm is holding price, producing. Yeah. Well, look, it's hard to wait for trades to actually give you the trigger because you'd be looking at this chart, you'd be like, oh, I guess it kind of tapped the level, and then we end up going and deviating again, right? And then you're like, you say to yourself, why didn't I just bloody wait? Because I know to enter there. Why did I enter before? You dumb nut. Well, that's the hard part. You could have a really high probability strategy, but you just struggle to wait for the trigger. There would be that would be my next potential trade after deviating. How easy is that? You need nothing else in the chart. This is one of those, I'd say it's a strategy in itself, where you don't need anything else. And if you find yourself adding stuff to this, it's just because you're bored of waiting for the sales. And once again, if we find footing here, that would be the target. But we've got limited time, don't we? Limited time. Even targeting the value area low of previous week would be a decent trade. This is a pretty significant structure formed on the downtrend, right? So, um, yeah, I can actually say just a quick analysis, right? So you got this low, put in that high. We broke down. Where did we break down? We broke down here. Yeah. So actually, that's still certifiably a D range, a range in discount, right? So if we return back up, I'd be looking specifically for a retest of that to potentially go lower. And so if you were long from down here, I wouldn't want a long expecting that to break because that's trying to predict things, which is not what we want to do. Yeah, I mean, that's it, guys. Short and sweet. Was it short and sweet? I don't even know how long that was. What it boiled down to was just a simple process. Um, yeah, hidden range. You can see why I use the word hidden accumulation, the term hidden accumulation now, because you can't see that structurally. You can't see that on the candlesticks. It's a hidden period where price was forced to remain inside between certain price levels. Yeah. And of course, naturally, you're going to be able to, if you frame things in a simple way like this, like have a good like foundation, this is a really strong foundation to start doing your analysis, then you can start to add the tools that we use here, right? So uh, you just wait for a break below value area low or value area high, yes. Then you wait for a close above a bearish candle, then buy with TP at 50%. Well, it's let's go through that again. So, I mean, here I can just see lower time frame. Let's go lower time frame then, because otherwise I'm not being super clear, am I? Well, it would have been a much lower time frame, but because that was a trending range there. So the real a true range break in my eyes on the 1 minute. I don't want to really go lower than that, even though I trade like 15 second or whatever to get my risk to reward tighter. Um, I think it would be good practice for me to say, hey, this is a real more significant break and indication of direction change. So you've got a down move, yeah, and then when does the up move start? Well, when we break a high with a body close on formed on this down move. So that's a low that put in a high that put in a lower low. Why is that a lower low? Because it closed below this. So that's what qualifies this as a high that I would want to see broken to say, hey, this is ready to go, right? Do you feel like shit that you didn't get in super low? Well, only if you're super high leverage, right? Because if you're like super low leverage and you can still monopolize on a really decent move, let's go from here to here. That's still 100 points. I think people have forgotten, like literally 6 months ago, or yeah, just a little bit over 6 months ago, everyone on Twitter, if they posted a 100-point trade, everyone would be like, "Whoa, man, you're a genius!" And he's like, "Yeah, I know. Yeah, 100 points. Yeah, in the bag. I'm the best trader on the planet." And so, but now we're like getting accustomed to 100 points, and 100 points has become our 20 points, right? Because the volatility is so dramatic, and so just remember the amount of money that you can make these days in a short period of time has increased. Um, so yeah, we have to stay sort of grounded and what's the word? Um, have rational expectation and reasonable expectations. Use your brain. All right, high low break up. Yeah. So if I see that trader Mo Trader Mo, if I see that high low, well, we have the deviation, step one, right? We then break structure, have a true break of structure. Then we target the 50%. I mean, should I just go full model, step by step? So, yeah, why not? Just quickly. Okay, so let's change this to 12. Okay, so one. Oh, come on, you bastard. One. Um, wait for T VAH slash VAL, so time, value area low or high, deviation, 2, um, and then you can go straight to entry. So entry after true structural break. True. It needs to be a true structural break. I don't care about all of this MSS nonsense because that's just gambling, in my opinion. Structural break. And so in a bullish example, a high that put in a low, a new low. A new low is qualified by what? Closing below an old low? And then you need to close above that. So that is true break in a nutshell. Entry after a true structural break. But you'd know that if you watched Market Structure 101 video I did. Entry after true structural break. 3, target what we call the, well, whatever TPO time range you're using, previous, okay, wait for, this should be previous, and that can be, monthly or weekly. So weekly, monthly profiles. Right. Entry after true structural break, target previous time value area 50%. Yeah. And just as always, we have the small print of trade must be, and I'm going to make it so you can't take all of them. It must be 2RR plus, right? And that will keep your risk to reward looking good. Where would the stop loss be placed? Good question. Well, yeah, if this is the, I think Jude's on the money here, high low breakup. Well, if we can get to our R to the 50% minimum, then wherever that is wherever your stop's going to be. So logically, you see here it says 2. Logically, you look at that, right? Let's say you entered off of the edge here with a body close, by the way. Don't be impatient. And you look at where that stop is. Well, it makes a bit of sense, right? Because this is a range that the body lows of a range that caused this shift up here. But this is the most significant structure here because it's actually the last range that caused the break of this sell side trending swing high formed on the down move. Yeah. So I would typically say, yeah, I can take that trade because it's in a place that makes logical sense, right? For example, if 2R meant your stop had to be at like uh, here, just as an example, at this price level, I'd be a bit more like, and that happened to be quite a significant distance, not allowing for 2R, or maybe it allowed for 2R, it seemed like we would probably come back for that, right? Then I'd be like, okay, well, that isn't allowing me. The 2R is not allowing me to place my stop at a logical area in price where I don't expect a price to come back to. So it's your stop loss goes where your invalidation is. Yeah. Um, and that's going to be different per trade, isn't it? So yeah, that's it, guys. That's it. Simple as that. All right, no worries. Well, Jude, you know all of this stuff anyway. Yeah. Well, I shouldn't say that because you're going to get loads of messages from people saying, "Oh, what do you know?" Uh, anyway, all right, guys. Thank you for joining me. That was a good turnout. Had a lot of people. Uh, I'll stop recording it now.